everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about virtually what didn't happen today. Well, one of the most quiet days I've watched for a while, and I'm going to show you some patterns that will explain why a lot of people have been losing money. Let's get into tonight's video. Well, welcome everyone. Before I get into tonight's video, it's possible that there will not be a video on Wednesday, so I'll probably do a live on Thursday. I'm going to have to go step by step. I have something that I have to do on Wednesday. I'm not sure if I'm going to be back in time and be able to have any context. So let's talk about what didn't happen today. What a crazy, terrible market. The patterns that are coming out of this market intraday and are just absolutely not tradable at all. And I'm not sure what you folks are doing. Early in the morning, there is some opportunities that appears. What I found is about an hour before the U.S. Open, especially on futures trading, and the hour after the Open is about the only time to make some money. After that, these markets have just been getting into this grinding formation. And after seeing this whole quarter unfold, I'm going to show you a pattern. And when I looked at this, I go, no wonder everybody's losing money in these things. The only thing that has been working is actually being able to play into some of these momentum plays, even the NVIDIAs and all those folks. It's been a tough market. Everything's been grinding up. From the standpoint of how I look at the markets through our portfolio management process, it looks a little different. We've got a lot of participation on the intermediate models and those type of things. But it's a tough one, folks. This year, while we might be printing up around 9.5% on the S&P and the NASDAQ, it's been a tough go to try to get there, even playing with the volatility in Apple and all those things. So probably what probably the best thing I can do is we might get into a little philosophy, and this is why I made tonight's title, Never Sell a Quiet Market. One of the very first things that happened to me when I walked on Chicago Board of Trade in 1979 was this guy was a corn trader. I started in a corn pit, and he was telling me when the markets are really quiet, you want to really do nothing if you can avoid it. If you have to do something, the last thing you do is sell a quiet market. We're also seeing, and I'm going to show you in a couple of minutes, that we're getting a volatility squeeze again. And this has happened multiple times this year. It's been incredibly frustrating from my viewpoint and trying to come up with some sort of analysis. The only thing that has always led me in the right direction is our database, and that is important to understand. So I had some interesting emails, so we're going to chat just a little bit while the room's still filling up. I had some interesting emails come in, and I think one of them really hit home for me is somebody was like, hey, your macro analysis is great, but you don't tell us about the rotation, what to buy and sell, and all those things. And just last night, I think between the buys and sells, we had almost 600 different orders coming out of our system. So those of you that do want to get to the next level, I'm going, tomorrow's Tuesday is typically we're going to go through stocks and focus on portfolio management. So I'm going to touch on some of those things for tomorrow. Thank God we have that, because these markets aren't providing much information at all from the standpoint of being able to tag along with any volatility or anything. And that's classic. I did my notes. did my notes. This whole afternoon has kind of been like this. I use electronic notepad and it just died. So all my notes aren't there. So that's interesting. I should be able to get them up in a minute. Anyway, it's one of those days, folks. It's Monday, right? And it was just a crazy day. I felt like I've been pushing on a rope all day. So it's coming up right now. So bear with me one second. Yeah, so the some of the things that we can talk a little bit about as far as setting up tomorrow. This might be interesting. We have durable goods orders coming out. They're expected to be up minus 1.3, and then we have the housing came out today. We had new home sales at 662. It was expected 680, so that number's a little softer. And somebody's going to go, I told you, Bob, this thing wasn't going to be like you thought it was going to be. I do think we need to get some more downward movement in interest rates. I'm telling you, 20 bips on the long bond interest. You get a quarter of a point on the mortgages to drop, and you'll see a big uptick in activity. And this is what I'm really talking about from the standpoint. So let's talk. Let's do a little philosophy here, and then we'll move on. I'll go through a review of the markets, but I do want to show you this pattern. When I saw this, I thought this is exactly why everybody's going crazy, and this is just captured. If you've been bearish, you've just been chopped up, and even being bullish, there's been a lot of chop in this market, and I've been talking about it. But when I'm looking at this chart, I'm going to show you in a minute. It just absolutely, just all came together a few minutes ago when I was getting ready for today's video. So let's go ahead and let's take a look at some charts. Let's get into this and see what we can do. I can't imagine I'm going to be able to come up with even 30 minutes of content. Maybe if you folks have any questions or anything, this is as good a day as any to ask some, because there literally is nothing to talk about coming to market. So let's take a look at this. This is the S&P 500. All right, check out this pattern here. I'm going to spread it out a little bit. This goes right from the beginning of the year, and you just see this stair-stepping pattern up. I don't have any PPMs. All I've got is the moving averages, and I've been talking about this angle of attack, and we've been just following through this. And one of the, I'm going to spread this out just a little bit more so you can see this, but one of the concepts that I talk a lot about, and this is this red line here, this red line going through the middle, that is the 21 period moving average. And what I want to do here is I want to make this style, I want to make this just a bit fatter here, because I want you to be able to see this line. But you can see this thick red line that I put up. That is what I call the primary demand line. When you get into, and I'll show you the PPMs here, when you get into this kind of scenario, this is the only thing that can save you from every one of these new highs that we've seen pull back. We're doing exactly the same pattern again. We actually went right up to the fib target on, I guess this was, let me see what day this was. This was Thursday of last week. We got right up to that fib target. That range was, let me bring that up so we can see everything. That fib target was 53.26, and we printed 22. And I remember talking about, I had a 23 number that day. I was saying we probably will reject off of there and get some kind of pullback. That's what we're doing. We're still in that same pullback. We're in the really 2 days down, 2 red bars. And I've been talking even further about this pattern, is that we're getting these 2 and 3 bar patterns, and then the market turns up. Now, what we're seeing, if you look at the market grid, I just want to expand this out so we can see this pattern, and then I'll bring up the PPMs here. But what we're seeing is you see the sharp drop in the market grid, which is the green line on the top, and then the bottom line, which is the STX line, is flattening out. So we're starting to get what I call a volatility squeeze. And typically when we get one of those squeezes, we're close to a potential rollover. But this is a bit different. We're probably going to get another narrow day. If you look at the ranges that we've had the last 3 sessions, it's very tight. Now let's take a look at the PPMs here. And when we start looking at the PPMs, this is what I've been talking about, which has been the sideways, everything printing out. And we're going to go through Bitcoin. And to be honest with you, I haven't looked at Bitcoin. I have like so many projects going here right now. I didn't get a chance to get around it. It was so boring to trade the market today from the S&P, which is my primary market I trade. And that's the case. So we'll take a look at that here in a minute. But this pattern, this is really a tough pattern. And I talked about this in the Substack last night. I think it's a little difficult to try to discern what kind of movement we're going to get out of here. Now that I've taken and made this full screen, if you look at the market on the top where the bar chart is, you'll see that we're really looking at that squeeze on that volatility. So it's getting pretty narrow. And when you get to the squeeze, that's where volatility contracts, and then we'll get to that point where you're going to break up or down. Now, the algos are suggesting the possibility of the next couple of days of seeing a little bit of upward momentum. We have, like I said, we printed basically into this fib target, which was 26 on 53.26. So that we're right in that range right there right now. So we're not really getting beyond that at the moment. So, but you can see we still have that slight upward slope, and it's interesting when you change your perspective, and I bring it up into a mode like this, you can see more of that angle of attack, and that we're really riding right along this. If you look at the market grid, is actually bouncing right around where that 21 is. What was it on? Yeah, so we look at it at this range here on the 18th. The market grid bounced off of that 21 line, and this primary line here is what I call the demand line. So when you're looking at a trend, that 21 will end up to be primary demand line. Anytime you hit that, it's by the dips. You get close to it, you can play off the market grid. You can also watch the algos predicting, like we're seeing right now, a couple of days higher. So I'm anxious to look at Bitcoin. So we'll go through that here in a few minutes. Okay, appreciate that over peaking. Let me know if that's better, Philip. Appreciate it. I was messing with this thing earlier, so appreciate that. All right, so let's go ahead. Let's take a quick look at the NASDAQ. I put up the same view of this daily chart. I mean, this is a mess. If you were trying to do, I wouldn't even want to attempt to do Elliott wave on this, because it looks like a series of ABCX ABCs, but meanwhile, you've got an uptrend, and this is pretty much, somebody might argue 1, 2, 1, 2s. It's almost impossible to come up with a wave count here. There's way too much noise in this market. And when markets get this noisy, they are stealing money from both sides of the street. It's very difficult to be consistent, especially if you're trying to position in any way. If you just were bullish and you closed your eyes and not looked at this, you're in pretty good shape, I think. So tell me, is the mic better now? Just confirm that if you would. Yeah, we should, somebody said, what are some of my other sayings other than never sell a quiet market? We should do like a whole session just talking about old cliches. I've got a whole sheet of stuff that I used to read every day. That would be fun to pull those out. I found them in some archives the other day. Yeah, okay, awesome. Is it better or good? Should it be lower? Just say so. Anyway, so looking at NASDAQ, same pattern. It started off at the beginning of the year where we were starting to get a little momentum and seeing some follow through, but then we got into these one and 3 bars up, 2 down, just very choppy. And meanwhile, they just keep stair stepping and blowing through the highs little by little. Okay, good. So this pattern that we're seeing here is the same pattern we bring up the PPMs. Now the PPMs are all sideways. This is trend mode. Like I said, when we come here, you can see the angle of attack a little better when we blow the chart up like this. But for the most part, it's just this is, I told you folks, this is what we used to call this the creepy crawler. It just keeps, it looks like a worm or a snake. It's just kind of crawling up, and it's stealing money from everybody that's trying to be short this thing, and it's frustrating everybody that's trying to be long. So no real patterns here. Some of the key levels to watch, and I'll cover this in the Substack tonight. That gives me a little more of opportunity. I wish I could get started on writing that a little early because I finish it late Pacific time, usually midnight to 1 a.m. is when I finish. But it's nice. There's no one around to bother me, and I can focus. So if you haven't got the Substack, go there. You can get a free a 7-day trial on it. It's kendallreport.substack.com or kendallreport.com/newsletter, and you can sign up either place. But you can get a 7-day free, and at least you can get a feel for it. But that's where I'm doing all the micro analysis. This is supposed to be Macro Monday, and there's literally nothing to talk about. Like I said, we did get new home sales. We got durable orders coming out tomorrow, but nothing really there. So let's go to interest rates, which are just as boring as everything else. And then maybe we'll, let's see what time is it, 17. I'm going to finish at 30. I want to get through everything I want to cover. We have some extra time, then we'll talk about a few things that might come up there. So let's go ahead and let's switch over to the treasuries here. All right, so treasuries also in this sideways range, but much different. We've at least got some volatility. We've got some patterns that we can look at here, and it looks like we have potential for another, this is daily, for a little bit more upside here, maybe coming back into 430. But I think for the most part, we're going to stay very sideways here. 420, I'm just going to round numbers, 420, 430. There's a potential for a 415 print, but that's probably not until maybe after Wednesday. Let's go over to a weekly chart. I think this is probably the more interesting chart to look at right now. If we just get off all the indicators, and you can see I've got the webs up here, which are the WaveTech webs. We got some really good webs. These are where we get these crossovers. Those are pretty significant bottoms. but it looks like we're going to start the roll again. You can see the algos are suggesting the downward slope in yields. We've got some new fib targets down here. If I roll it way down, and we can see the 200-day moving average, this 200-week moving average way down here. We've got ranges down at 315, which I think is not a chance, but we're continuing to see these things calculate down here. A lot of times I tell you about these little islands. Let me draw that in, because you'll get these island patterns here. Right here is an island. Sometimes you get these here. I think this is just another island. I don't think we get anywhere near these. I think we'll come down and probably maybe get toward some of these other areas right here where we might come over into this range here. But for the most part, we're likely to stay in this upper end of this range and probably just keep in here and probably draw a big band. This is what my expectations are. This is down here, maybe at the 4%. This was when we dipped just a little bit under 4 here. So I don't really see any of that stuff really getting, I guess, much out of this range at this time. So this pattern, like I said, we're looking at algos trying to roll over. I don't think they roll over. I think we're in a flat line here, and we're going to be on hold until we get closer to some of the Fed stuff that I've been talking about. Just real quick, I've been kind of hinting around. I think the Fed's going to be a little bit sneaky here, and I think they're going to at least put together some sales by the time we get in. If they're not already quieting down some of the QT that we've been talking about, then I think there's a possibility for the markets to sink back as far as the yield goes. So let's do this. Yeah, that's an interesting, thanks, GB. We got Powell speaking and PCE coming out Friday while the futures are closed. Good Friday. Will we see an increase in volatility coming into Thursday? I think, just real quick, let me come back on screen. I think that's a really good question, because what I think is going to happen here, we are going to see some window dressing. We're going to look to tomorrow, Tuesday, could kick up volatility, but Wednesday, Thursday, if you're going to square your books out for this first quarter, it's time to do it. And it's amazing how quiet today was. So we'll see if we can actually get any of that stuff to come up from behind there. So so let's do this. Let's do Bitcoin. What time we got? 23 after. We'll talk about that. I'll come back and we'll chat for a couple minutes. Let's go ahead and do that. Okay, yeah, so Bitcoin 71. Let me go to daily. Yeah, we did see it print up a bit, and the algos have turned up. We got some new fib targets. I noticed this morning when I came in. I did see this where we traded at RTX here so if you have the algos had turned up, we crossed through first derivative. Looks like we got a little surge coming in where we're going to get back above these averages here. So it's been pretty obvious since we printed that 60,760 number the other morning, that this was going to get a bounce back. The weekly chart has a bit more range, and this is, in my opinion, is going. I drew this in. Let's just go with the chart here, and so we can take a look at how this is looking. Yeah, one of the things, and I was discussing this in Substack last night, but let's just draw in a couple things here. And this is expected here at the moment, is we're going to see this market grid start to do this over the next couple of weeks. We should stay within the ranges. This is a weekly graph. We'll probably see, this thing just trading in these ranges. We have this upward 10 here is big time trend. I'll bring the PPMs back up, but these are big angle of attack, even though you're looking way over here in May at the rollover, probably around the halving. I think too many people are expecting this thing to, at the halving event, to start another cycle up. Typically, we'll get like a pullback from there. So we'll see how dramatic it is, and if it happens. So it'll be interesting coming into that pattern. But as far as, so we got this reversal last week. We still closed lower. We're coming back up into the top end of the webs here. Just trying to expand this out so we can see this. Yeah, so a lot of times what will happen with these kind of patterns is you get that compression of the market grid. You can see it's already turned, kind of flattened in the bottom, turned down. We should see after this week, this weekly chart I have up here right now. We'll go to daily analysis here in a minute. But we basically are seeing this contraction go in, and we should hover, like I said, along this 10-period moving average. Right now, that number is at 57,468, but it's going up, I think, 4,000. Let me look here. It's going up 3,000 points per week. So all of a sudden, this number will be in this pattern. And this is a pattern I have not talked to you about, so educational moment real quick here. And when you see this, I don't care if it's on any time series, whether it's a 5-minute chart or hourly, daily, weekly, whatever it is. When this happens, I'm going to draw this in for you so you can see this. This is significant when you see this. So what will happen is, like I said, we're going to get the market grid to kind of collapse in here. Meanwhile, what you get is this 10-period moving average, and when you get a collapsing market grid and a rising moving average, the 10 rising into the pattern, then usually what you'll get over here, let me make this a little thicker so we can see this. This is what you get. You get this move here, and then you probably get a pattern like this, and typically it's going to go that way. And you can see we should get a bounce somewhere, and this is second, third week of April, and my expectation is we don't trade outside of this range. And you can see we've been pinning up against the top end of the ranges of the last several weeks. So let me clear this out so we can see it now. I'll point that out real quick. And because this is from the standpoint of, we've got here, we printed at RXT, above RXT, we printed RXT again, we did it again, we did it again. Now with this volatility expansion, this is the opposite of what I was talking about in the equity indexes. We get this expansion getting larger and larger, and let me just come on screen just so we can get out. Yeah, so you get this volatility start to expand and get very broad, so it gets very wide, and then it starts to narrow down. And then once it narrows down, probably anywhere from 30 to 50% of the volatility is out of the market. then you're set for the next movement. And then that's when I'll bring up the, that's when we get over to maybe the PPMs will start to turn back up again. So let's go to the daily and see if we can get this thing tuned in a little bit better. So the daily is giving us this pattern here, where we're looking at a stair-stepping pattern up, where momentum is going to get fairly decent. We're going to get up 1.2. The key to this market now will be, just going to bring up is that we stay above these moving averages. Particularly, we stay above the 10-period moving average. We've got new fib targets up here that I mentioned, 75. Check it out, 75,241, 80,700, and 84,130. I think the weekly chart, this 75 range, that would be a new high. I believe we printed 73 right here. Yeah, 73, we'll call it 800, 794, depending on what exchange you're on. But this is probably a retest of the highs, and then we get a rejection off of there. If we do go to new high, then we'll see it print up into this area. But what we've got here is an interesting crossing of the moving averages. So I'm do my best to blow this up so we can really just zoom in on the averages here. So when you start to get this crisscrossing, where I am going to hang with me one second. I just want to pull some things out of here. I just want a clean chart to look at. So typically when you get into this pattern, you've got what this is picking up, these green dots up here are picking up this pattern. Let me draw it in for you. So we're at 31 minutes, so I always find a way to keep talking. Let's put this up here. So this is, so we get this pattern, and this is potentially 1, 2, 3. And so, but what's happening is this is the fib ratios off of this here. Let me clean it. So when we get this pattern here, these dots up here, and those are 75,000, 80,700, and 84,190. When we get to those pattern, what this is projecting right here is that this is a little mini ABC or a 1-2. And what that says is that the length of length of 3 will be equal to that length of 1. And so we're seeing that's where this pattern is coming out right now. And that's coming not off of this level here. Let me back this out. We can do something else here. I got to pull this off one second. This will at least do some education today. So let's go in here to the indicators, and let's just bring this up. And I want to go to inputs, and what I want to do is show the pivots, okay? And what this is going to show me, this is why I wanted to do this. These pivots, this is where this is being calculated from. So I wanted you to be able to see this. Now I'm going to draw this in. All right, so this red pivot here, green, so this is the pattern here. And we also have a pivot here. So these numbers here are coming from, this is projecting up off of this high pattern here. And so these dots that we're seeing here, and I got it all scribbled up, but those dots there are 1 and 3 equal, or 1 and A and C equal, or a multiple of 1.382 times that length, or 1.618. There's other fib numbers, but I have used these for a long time to just identify these swing patterns. So this is a classic swing. So if we take out this pivot right here, then we'll get This is the retest. All this is telling us that we're going to retest this high. That's what I was talking about. If we break above that, then you've got roughly 60+% probability of hitting even fib target 2 or fib target 3. Yeah, so it'd be it would not be 1 + 1 = 2. That would not be what it is. So if you guys want to do quick education, let's do this. So what this is let me get this off here, clean it up. All right, I have to close this down, but let's do this real quick because this is the pattern it's doing. I'm going to move this over, and this is right out of the trading room. So we'll spend a few minutes and do this. So tell all your friends watching into this thing of this broadcast tonight. So let's go ahead and bring up this, and this would be. I know a lot of you have seen this that we're in the trading room, but all we're looking at is we're looking at this pattern here where we have, and I'm not going to put the letters up, but we have 3 possibilities that this is the length of one right here. Once we establish this low, we measure from this low and we put that length of one would be equal. And then there's 2 other numbers. I don't know what, can I do text on this? Yeah, let's see if we can pull this off here. So this is the 3, 1 equals 3, or A equals B. So the length of one would equal 3 measured from the bottom or it would be, yeah, so we'll leave it there. So the other one would be that the length will be a multiple, 1.382 times the length of 1, and then it would be 1.618. There's other bigger ratios, but those will get you to good trades. So when these dots that we're looking at over here, what we're looking at here, these green dots here are equal 1.382, 1.618 of that pattern. And so the indicators are going to do that automatically for you and update. Sometimes you'll get revisions if there's more intricate patterns. But if you turn on those pivots, you're going to see exactly where it's being calculated from. There is, let me just blow this out here now. So the point of this is that when you're looking at these swing patterns, if you can just figure out, it's what I've told everybody, if you trade, you should trade in increments of 3s. And so you want to take action at every one of these points. So when it gets to equal, take part of the trade off. Gets to 1.382 times that length, take another trade. And what you're going to do is you're not just going to take the values, and if it doesn't hit the value, you get out. You watch for reversals, 15-minute, hourly charts, all those type of things to time those trades out. And then the last trade, you start to bring a trailing stop up behind that trade and try to get to that 1.618. Most of the time, you'll get 1.382 out of these trades, but they're really profitable trades when you see that. And the nice thing is the indicator is going to help you really set those up. So so let's take a look at gold. Somebody said gold's making this real time. So anyway, I guess when there's nothing going on in the markets, all we can do is try to we'll do some education. How's that? Let's go here. Let's go ahead. I'm going to put GC up, and not. Yeah, gold is, okay, let me bring it up here. So gold doesn't really have this pattern here because of this was a big flush job the other day, and I mentioned this in Substack last night. This is a significant high for gold. That's at 22.25. That's going to be a number you're going to be talking about for a while. The good news is we have some upward slopes here. If we look at PPMs, there's still a lot of cycling to be done before we're going to be ready to get anything going here. But just looking at the bar charts here, that's really good. If you look at, you even see, for those of you doing candles, you'll see here that even the candles got almost like this doji kind of big. This is a big deal. The spike was a big deal on this pattern without even going. I use the bar charts. I'm old school, but that spike was substantial, and we still have some upward slope here. But that high is going to probably be the place to go. Now, where we did have it, this was the trade that we're just going through. So I guess we're doing some education here. So let's just draw this in, because here's the trade I was. If we were to do a replay, this would be where the trade came from. You'll see it right here. So here was the swing trade here, and then this here was projecting these numbers. So if you would have done the trade, let's say you were trading gold, you would have been buying in this consolidation here, okay? And then you would have exited part of your trade here, part of trade here, and the 0.618 was perfect. It extended beyond that, but that would have been a good trade. This is hindsight, that we know that this was a good trade, that it extended. If we would have done that trade, we would have felt pretty good, because I didn't get the exact values off of here. Let's do that real quick. So let's just take a look at, so we would have entered, let's just say, we'll take it the worst range at 42. There was a trade then out at 75. The next trade would have been at, looks like 20.95, and then the last one at 21.24. So that would have been a nice 70, 80 buck trade easily on average. And so that is, that's all you're looking for. It's nice if you catch the whole thing, but if you just go after those, that's why I built those indicators. Just for the record here, I built those indicators because I wanted to catch that trade. And I thought, I just need it to let me know I can put the pivots up. That's the tools that I use every night. And I turned off some of these things. If I put some things back up, I'm just looking here. We put the market grid. So the things that I show you every night, those of you that have the indicators, let me go back here. The things that I have up every night are the PPM 1, 2, and 3, and the 200. And then I have the market grid. I have the fib targets on there. Those are the primary elements I use virtually no matter what chart I'm looking at. I'm looking for those Fibonacci swings. I'm looking for those patterns. And we can actually find larger patterns sometimes if we go up to next level chart. There was no swings on the gold, but that was a really good number from the standpoint of just picking that up. We also had, check this out just for a second here. I'm just going to do a replay real quick since we're deep here. So if we set the replay, what we were seeing out of the algos right here, this was going back on the daily futures, and if we just let it run, what you're going to see is the algos were Hang on, it's going too slow. So the algos were already, let's try it again. So if we run this, the algos, right here, we're seeing the fib targets that we were just talking about, right? So we're seeing the fib targets. Here's the numbers we just talked about. So we're also seeing the algos absolutely suggesting we're going to go vertical on gold, right? So the setup was there. All of the primarily PPM 1 and 2 were projecting up. And then you can see here, now we're starting to get a breakout, and now we're going to head right for these numbers. So look at the algo just shoot up. Algo suggested that was peak momentum. So you're usually pretty close to at least that intermediate high. We have the benefit of hindsight going here, that we're looking at this thing. There we go. Next bar, we nailed the trade. So we could have got all three of our prices off. And that's why we're always talking about the having a strategy when you see these numbers and you can play these things. And the nice thing is that the stop losses were just right below those lows there. And I don't use stop losses because I don't, but I would exit if we took out some prices. I don't like my orders laying out there. I'm the market order king. I market in, market out. This is how I trade. Usually it's a limit on the bid or something like that I'll do a stop limit. But the point is that that trade was absolutely perfect. So you can see here it is even better blowing up. So if we just, I'm going to go back one more time so you can just see this thing unfold here just on the bar chart. But do it one more time. It's 46 minutes in. Give me a thumbs up and like if you're enjoying this. So here's what we're doing. So this was the bar right here. It was a downprint bar. We got new fib targets to come in. And if I blow this, if I go back here, let's see if I'm at the right place here. Yeah, okay, we're not there yet. Okay, that was not the right target. This is the target, the new one coming up. Hang on. There it is. So we got the new target right on this bar. So let's blow that up. So this was the island, so we get a new target here. We had the PPMs all forecasting that they were going to go vertical. This is actually really good. If you look over here, this is one of the things I've been teaching you folks, is if you have a Fibonacci target like this, from WaveTech Fibonacci target, and the algos are pointing down, we're not, probably the probabilities of hitting that is not it. So you want to see algos turning up. And if we go, I think just, so on this bar, now we see right here on the second bar, we got the algos to print again. Let me just print this up. The next bar is saying that this steep advance on the 10-period moving average. So the WTAR is telling you that we're going to see the moving average is going to go vertical here. Okay, that's pretty much a parabolic move. You see that the forecast, I'm going to go back and forth. The forecast you can see here on PPM 1 was just vertical. That's where that calculation is coming from on that SMA. And then we should be buying around this level here. And then we've got the targets on the upside. So then we go, I think we got 2 bars to go. Okay. Not only that, we got an outside reversal bar on this next bar. And then we get the explosion. There we go. Boom. And if we close our eyes for a minute, we could have got to the next day. But if we had our orders focused in on this, we could have taken that profit. So I'm glad I'm going to come back on screen here, folks. So I'm glad we got to do some education. That was good. So unfortunately, at the end of the video, no one will actually see it. But anyway, these are the kind of things we should crop out. That was a good session. It basically kind of the 3-bar play there. That's exactly what FF just talked about. This is a 3-bar trade. I'll put it back up so you can see it. We got the outside reversal and then three up. But we had, more importantly, we had all those PPMs forecasts kicking in, the WTARs you could see visually. And this is the thing, folks, the only way that moving average can do that is that we have to be above that moving average. In the case of a parabolic curve, that is the thing. Let's just play this thing out because we know there was more to it. Let me just let it run. So you'll see the PPM continued to, so we got into, okay, that's where I just wanted to see where this finished. So this bar we got 1, 2, 3, 4, 5, 6 bars. We got the red triangle on the top. That's the top of this pattern. And now we're into this consolidation mess, just like we got here. I just want to point this out. If we come all the way back over here to December, we got that spike up in December. Look what happened after December. I suspect we're going to end up trading back into maybe 2200 to 2160 again. There's no way we're going to get out of there. Yeah, so good stuff, folks. Anyway, I hope you enjoyed that. Tomorrow we're going to dig into talking a little bit more about portfolio protection. Excuse me. Sorry about that. Sorry. 1 second, please. Sorry about that. Anyway, yeah, what we're going to get as far as the tomorrow, we'll go through some portfolio management. We're going to talk about, we'll do stocks, we'll do some other stuff tomorrow. So make sure you tune in, hit the like button. You got a free training today. So good stuff. Don't forget that trade. If you have these indicators that and this thing sets up, all you have to do is sit there and watch. And this happens on, this is a daily chart, but this will happen on a 5 minute, a 1 minute, any length for day trading. When you see those swings, those of you who've been in the live room, you used to use a 5 minute setting up those 5 minute 1, 2, 3 swings, all those things, and they're very profitable. And once you get that little green arrow on the bottom when you're looking for the pivot, once you turn the pivots on, you can really nail that. Anyway, folks, thanks for watching. We'll see you tomorrow, same time, 7 p.m. Eastern. Hit the like button, and off we go. See you then.